And we are live in our recording. This is our first podcast of real estate agent and a mortgage broker, which to me is like a keys and money combination. And on my first podcast, I'm excited to introduce Ruby Bains, and she has two titles. One, she's an amazing independent mortgage broker, committed, energetic, and then also part of our newly hybrid program where we do real estate and mortgages. Ruby is our team member. So welcome to my first podcast and podcast for both of us, Ruby.
Thank you. Thank you for having me.
You're very welcome. Awesome. So the objective of this episode is Ruby is, and it's dedicated to the first-time home buyers. I mean, the market is amazing right now for buyers, and Ruby here will be able to navigate us in terms of what the first-time home buyers should know in this market.
Let's do it.
Very good. Well, why don't we start off first talking about what attracted you to become a mortgage broker in the industry, a little bit about your background to see how
Yeah,
much you enjoy what you're doing.
definitely. So, talking about finances is part of my DNA. I genuinely love helping first-time home buyers. It's such an important milestone. And either first-time home buyers are my people. I love sort of guiding them through that journey because it can be overwhelming, but I'd like to make that process as smooth as possible. I was talking about my background. I've been a mortgage broker for about 8 years now. And I've had the good fortune of helping about 370 families, and I've funded over $250 million in mortgages.
Wow, that's a lot
Yeah.
of dollars.
Thank you to all my clients and referral partners that it's a collective team effort. But prior to becoming a broker, I was working in the banking industry for 25 years. So my experience is mainly in the credit union space, the teller, and worked my way up to a branch manager. And in between, I had various roles in terms of financial planner, insurance specialist, and then I decided to go into management. And my last 10 years in my banking career were managing different branches of different portfolios.
Amazing. That's like a fully diversified package of skills and talent from banking.
To use that knowledge to help my clients, not only just with their mortgage, but provide a bit of a more holistic approach as well when it comes to finances.
That's amazing. So let's dive into you're a mortgage broker for first-time buyers. All of us have banking relationship. We have personal banking. We know our personal banker. And within the banking, they also have independent mortgage specialist. I am an ex-RBC mortgage specialist. What's the difference between an independent mortgage broker and somebody dealing directly with their banker?
Right. There seems to be a lot of confusion around this area in terms of what the different roles are. So, the main advantage of dealing with a broker is instead of you having to go shop around from bank to bank, work with over 50 different lenders. So when I'm working with you, I am looking at the approval, be getting you the best rate, the best product for your situation. So it saves you time having to go from bank to bank to figure out, which lender is going to give me the most amount or the best rate. I do that on your behalf for you.
Is a flexibility based on the client's needs.
Sometimes when you're working with the bank, they may not be able to give you the same time and attention that your file requires because they have a big portfolio of clients that they're working with. But when you're
Yes,
working with someone like myself, walk you through that journey with speed and clarity so that you feel
that's
like you're supported through every step of the way.
yes, and I would say that you operate just like real estate agents. You're on a commission role. So
Yes.
you're driven not by the banking hours, you're driven by the objective of getting the file done to the client and different motivation in that regards too.
Definitely, yeah. Because a lot of clients aren't available 9 to 5 and they can only, interact with you after hours. So as a broker, I'm able to provide that service where I can talk
Yes.
to them after hours and vacation at midnight if I need to.
So let's diving onto the first time home buyers. I'm going to do a little role play. I will pretend I'm a first time home buyer. You're the mortgage broker. And
Right.
I will say, if I'm deciding to buy my first home, what is the first step I should do?
The first thing you need to do is get a pre-approval before you do anything. Because a lot of times, what ends Happening is borrowers get excited. They start looking at properties before they actually really understand what their numbers look like. So, very first step is get a pre-approval in place so that you know exactly what you can go out there and shop for.
Yes, and now I'm going to wear my real estate agent hat because that also helps for me as a real estate agent to know that my client has already did their, you know, financial preparations.
Well, is key. That's the number one thing that any borrower should be looking to do.
What do you do at the pre-approval stage? What do I need to give you, and how much information is going to be very accurate?
Typically, what I do is I schedule like a 30-minute strategy session with my client so I can really understand their financial picture, figure out how much payment they have, what their credit looks like, and actually what a pre-approval is. Bank willing to lend you based on your income, based on your credit, and your current assets and liabilities. The 10, it's like a verbal approval. And typically, I'll issue a pre approval letter once I've had a chance to review all your documents and put your application together. A formal pre approval can be submitted in to lenders to hold rates as well, which is really important, especially in a rising rate environment. Review all the documentation so I can give you a little bit more accurate information so that there's no misunderstanding and you don't end up finding a home you love and then you find out you don't qualify for it. So
Good.
I like to be very
Yes.
transparent and sometimes, you could qualify for more, but I do a little bit more deeper analysis with my clients and really understand what their life and what their budget allows them based
And
on.
this is part of that holistic approach you take.
Yeah, because it
Assumptions.
can get tricky with self-employed borrowers as well, and sometimes people have
Yes.
time or if they're casual. So there's so many different things to consider when you're working with it's, to make anyway, so self-employed borrowers and, that are, like, casual or are getting overtime income, every lender views things differently. So I like to get all that information upfront so I can give them more accurate numbers when they're shopping around.
Awesome. So from your experience, what are some of the mistakes and not to do when you're a first-time
So
home
there's a
buyer?
few things. First one is not paying employers while you're shopping around
Correct.
property, because even if you're getting more money, because the lender is going to view that negatively because you're on the job. If it's in the same industry, it may be viewed differently, but I always recommend to not change jobs during your process of house shopping. Of
Okay.
it happens, and we deal with it at that time. He is on any new debt. So if you want to buy that Ferrari or that Lamborghini, I recommend that you wait till your mortgage is approved because really impact your debt ratios. So you want to make sure that there's no other debt that's being taken out through this process. Is really understanding the closing costs because sometimes people don't realize that they need money outside of their down payment. So you need money for property transfer tax, depending on what the purchase price is, your legal fees, insurance, and property inspection. So there's so many other things that you need to kind of budget for. So that's another thing that I always recommend is to be aware of what the closing costs are.
Yes. I It's important just because you don't want to arrive at the completion date and then only to find out that you were short of funds. And first-time home buyers, they don't have a lot of resources to work with, so knowing their numbers are key.
Correct. Yes.
Awesome. So no changing jobs. Part of your holistic I can position again is that you will go through these closing costs, but making sure everybody
And
budgets
and
that.
that's really more key because you may be approved for a higher amount, but I usually do a bit of a budget with you because you're going from now renting to now having a mortgage payment. And if it's a condo or a strata, then you got to factor in strata fees, property taxes, heating. So you have all these other expenses to budget for. So typically I will advise the borrowers what's a maximum they can qualify for and then what their life situation, their budget allows them.
All right. Excellent. Leading on to the down payment, can you walk us through like what is the minimum down payment or how sort of how does that structure works with first-time buyers?
Typically, like if you're purchasing a property under $500,000, the down payment required is 5%. So for example,
5%.
$1,000, that would be $25,000 down payment. And if you're purchasing,
Okay.
say, property for $1 million, then your down payment would be 75,000. So
Awesome.
the first 500,000 is 5%, and the next
Okay.
100,000 is 10%.
Excellent. So if obviously in this market that market adjustment is in the favor of buyers, so 500,000 you can get a lot of options, especially in the condos and even up to a 1 million.
So
So
the
okay.
government has that amount to $1.5 million for the first time home buyers, given
Okay.
that the prices in Metro Vancouver have risen substantially over the years.
What is the mortgage insurance on these properties that you
Typically, what
pay?
happens is insurance providers, there's Sagen, CMHC, which is Canada Mortgage Housing Corporation, and then Canada Guarantee. So
Okay.
we provide insurance that's purchasing with less than 20% down. And premium, depending on how much you're putting down, gets added to the mortgage. So it's funds that you have to come up with. It just gets added to the mortgage. But as a result, you get better pricing. So the rates are slightly better
Oh,
on insured mortgage than, let's say, a regular mortgage with 20% down.
and that is the threshold. So if I pay more than 20%, I don't need mortgage insurance, but I'll pay a little bit higher rate.
Correct.
But if I'm less than 20%, it's an insured mortgage, but I get preferred rate. Okay, that's helpful for as a first-time home buyer. What about the rates? How is my rates going to be
To really
determined?
determined by your income, your credit, the property itself. So the lender basically does risk-based pricing. They look at the
Okay.
servicing to see what your ratios are. So those are usually the main factors: income, credit, and your debt servicing ratio that determines your rate.
What would make my rate go up? Like what will not what is one thing on my report card that doesn't look good that the lenders will say, no, you need to go
It
higher
really
rate?
depends on your situation, what it is that's on your credit. If it was a one-time thing that happened a while ago and you can defy it for whatever reason that it impacted your credit. If there's a story behind it, then the lenders sometimes are okay with it. Um,
Okay.
may price the deal a little bit higher if your credit is bruised, or if it's or they'll want a guarantor or somebody on the file with a higher credit score. Lenders have minimum beacon requirements. So if
Okay.
you're most for insured files, most lenders want your credit to be at least 680 or above.
So as a first-time home buyer who may or may not have variation of their credit scores, can you walk us through what's a low, medium, and a best credit
Anything
scores?
above 680 is considered good. You're
Okay.
golden. Anything under 680 is sort of the lenders want to know, okay, what's on the credit? Why is it low? And sometimes it could just be low because you don't have too many credit facilities. You maybe only have one credit facility open, or it could be low, like you said, because there's a collection item or there's some, unpaid parking tickets, or you
Yes.
got behind on debt because of an illness or a divorce or death. So there could be various reasons why your credit score could be low. And as long as it's explainable to the lender and it makes sense, lenders will
Yeah.
work with you.
That's why I always say those parking tickets, don't fight them because their last resources are always sending it to the collections or so
And
on
you
like
find
that.
out it's on your credit bureau.
Yes, they're brutal.
Mhm.
They're ruthless with that. They don't care about people's future plans. Awesome. Um, right now, the market and the circumstances based on what you see based on underwriting deals and so on. What's your advice for first-time home buyers right now in this current
This would be
market?
to make sure you open a first home savings account, because that's a really good program that the government introduced where
F-
you the
FHSA.
FHSA, right? So you can contribute up to
Yes.
8,000 each with a maximum of 40,000 per borrower. It's
Okay.
basically allows you to write off that when you're filing your taxes, but also gives you that tax advantage where
Okay.
Times your income by the amount that you've contributed into your first home savings account. So I highly recommend
Okay.
anybody looking to get into the market should open one.
So that's a investment vehicle that they can actually use strictly, mostly you get the tax deductions, but instead of putting it in RRSPs, now you put it in
So how
FHSA.
it differs from RRSPs is doesn't have to be paid back. So with
Awesome.
RRSPs, you can use them towards your first time home purchase, but that money eventually has to be paid back into the RRSP. Whereas the first home savings account doesn't have those restrictions.
How long ago this FHSA came into effect?
Yeah, I think it's
It's been very
a couple of
recent.
years now, at least 2 years for sure.
Okay.
Yeah.
This is the kind of objective we needed to kind of have on this our first podcast to give in the enough of the framework for a first time home buyer to understand their planning. And then I want to thank you for your time
Of
to be
course.
here, and hopefully we will have more future podcasts. So Ruby, thank you so much for your guidance and helping out the first time home buyers, and hopefully we will be able to have future more sessions to guide first time sellers, reverse mortgages, and lots of other helpful topics. And if anybody needs to have a consultation with yourself, we'll have the contact information in this podcast there. And you're reachable. Your sessions are usually in person or virtual or both.
I kind of adapt to what the client wants. Typically, I like to do like a Zoom call and a 30-minute
Okay.
strategy session via Zoom. Some of my clients prefer to meet, or
Okay.
comfortable with the call. So I kind of adapt to whatever my client wants. But I find or face to face is always good because then you really get to sort of understand the short term and the long term needs of the client.
Perfect. That's great. And for all our listeners and people who watch us, if you find it very helpful, subscribe to our channel. Thank you, Ruby. Have a
Thank you.
wonderful day.